Welcome to This Explainer. Let's just dive right in, because today we're unpacking a truly unprecedented shift in global defense markets. We're looking at India's defense boom and the anatomy of a brand new export superpower. Now, for decades, India has been universally recognized as one of the world's absolute largest importers of military hardware. You know, they were always the buyer, right? But a massive structural transformation is underway right now. The latest data for 2026 shows a nation that has completely flipped the script, pivoting from being just a top importer to a major, highly sought-after global supplier. So how on earth did this happen? Well, today we're going to rely directly on the absolute latest numbers and policy shifts to figure that out.
The sheer scale of this transformation is, well, it's staggering. In the 2025-2026 financial year, Indian defense exports hit an all-time high of 38,424 crore rupees. That's roughly 4.5 billion US dollars. This isn't just some steady incremental growth either. We are talking about a massive 62.66% year-on-year explosion. To really put that into perspective, over just the past 5 years, exports have effectively tripled. This compounding growth rate is literally turning heads globally, and it proves that the hardware India is developing is finding very, very eager buyers on the international market.
So you might be wondering, who is actually driving all this growth? It's a really fascinating dynamic. State-owned defense public sector undertakings, or DPSUs for short, saw a jaw-dropping 151% rise, contributing over 21,000 crores this year. Meanwhile, the private sector, which has been steadily carving out its own space over the last decade, brought in over 17,000 crore. The big takeaway here? This isn't just a private sector success story, and it's not purely a government one either. It's a massive dual-engine surge. Those historically slower-moving state-owned firms are rapidly accelerating, and they are quickly catching up to a thriving private sector ecosystem. All right, moving to Section 1, Fueling the Domestic Engine.
You know, you can't export at a record pace if you don't produce, and it all starts with the money. In the Union budget for 2026-27, the Ministry of Defense received an all-time high allocation of 7.85 lakh crore. That's almost 91 billion US dollars, making up nearly 15% of all central government expenditure. But the real game changer, that's 75%. Out of that massive budget, a full 75% of the capital acquisition budget is explicitly mandated for domestic industries. We're talking 1.39 lakh crore directly ring-fenced just for Indian companies. By guaranteeing this massive domestic cash flow, the government has essentially handed these companies a massive safety net, letting them scale up their manufacturing with absolute confidence.
But here's the thing. Capital alone isn't enough. Businesses need an environment where they can actually breathe and operate efficiently. So, sluggish bureaucracy has been aggressively replaced with rapid, business-friendly routes. In the past, foreign companies had to deal with agonizing case-by-case government approvals for even minor shareholding changes. Total nightmare, right? Well, not anymore. Now, foreign direct investment is permitted up to 74% under the automatic route. And for investments under 49%, that whole tedious approval process is gone, replaced with a super simple 30-day disclosure requirement. By radically cutting the red tape, India is making it incredibly easy for foreign tech and capital to pair up with domestic firms.
And honestly, this wasn't just talk. The Defense Ministry formally declared 2025 as a year of reforms, signaling a huge focus on completely restructuring how acquisition and production actually work. And they put their money where their mouth is. They established 15 R&D centers of excellence across 82 research verticals. Even cooler, they aggressively backed the startup ecosystem. They engaged over 619 startups and microenterprises through their IDEX scheme, handing out contracts totaling nearly 450 crore rupees in just a single year. They're essentially democratizing research and development so that the best innovation isn't just locked up behind closed doors in giant state-run labs.
Okay, Section 2, the geopolitical catalyst.
Beyond policy, we have to look at the real-world events that acted as a massive structural demand driver. In May 2025, Operation Sindoor became a massive catalyst for accelerated capability building. Right after the conflict, the government immediately pulled the trigger on Emergency Procurement Tranche EP6. This was a 40,000 crore drive laser-focused on rapidly replenishing stocks, things like drones, counter-drone systems, and air defense platforms. But here's the most fascinating part of all this. This domestic emergency procurement inadvertently proved these Indian systems in real-world, highly stressful field conditions. And between July 2025 and March 2026, that newly established battlefield credibility sparked a wave of foreign interest, resulting in around 24,000 crore in brand-new export orders.
So what's the big picture takeaway here? It's that this demonstrated national security imperative permanently shifted defense spending. It went from being a discretionary budget line to an absolute, non-negotiable necessity. According to SIPRI data published in April 2026, India's overall military spending jumped 8.9% to $92.1 billion. That officially elevated India to the world's fifth largest military spender. Just to frame that, they are now outspending Pakistan by more than 7-1. This dynamic creates an incredibly strong, long-duration demand floor. The structural need for modernization is absolutely here to stay, meaning domestic defense manufacturers have a guaranteed, long-term customer in their own military.
Which perfectly sets up Section 3, blockbuster systems and orders.
With the demand crystal clear, the number of exporting firms has swelled to 145, and India is now shipping equipment to more than 80 countries. So, what exactly is flying off the shelves? Well, the export catalog is anchored by some heavily sought-after, battlefield-proven systems. We are talking about the heavy hitters, BrahMos and Akash missile systems, Pinaka-guided rockets, which notably saw a lot of export success with Armenia, along with ATAG's howitzers, Swathi weapon locating radars, and some incredibly cutting-edge AI-enabled electronic warfare systems. These aren't hand-me-downs. These are modern, highly capable platforms that can go toe-to-toe with anything on the global stage.
Looking over at the corporate side, the multi-year revenue visibility this creates is just wild. Hindustan Aeronautics Limited, HAL, is sitting on an absolutely massive order book of roughly 2.54 lakh crore, heavily anchored by their Tejas Mk1A program. Bharat Electronics has a backlog nearing 74,000 crore. Bharat Dynamics is projecting over 26,000 crore. And in the naval sector, Mazagon Dock is the clear frontrunner for the gigantic 70,000 crore P-75I submarine project. For these companies, this represents anywhere from 7 to 8 years of guaranteed revenue visibility. Honestly, in most equity markets, finding that kind of long-term certainty is practically unheard of.
When you step back and add it all up, the aggregate defense sector order book is nearing a mind-boggling 3.5 lakh crores as of mid-2026. This incredible backlog highlights a total fundamental shift in the industry's life cycle. Analysts are pointing out that the main challenge for the Indian defense sector has officially changed. It is no longer about begging for or winning orders. They actually have more orders than they know what to do with. The challenge now is strictly about having the physical capacity and the supply chain resilience to actually execute and deliver on these multi-year backlogs.
But let's take a quick reality check. Section 4, Structural Risks and Outlook.
To really understand this boom, we have to look at the vulnerabilities. Investors and market analysts are keeping a very close eye on 3 huge caveats. First up is execution risk. Order book to revenue ratios have skyrocketed to as high as 6.9 times for some of the major players, and we're already seeing some production delays creep in, like the recurring supply hiccups in 2026 with GE engines for the Jata jets. Second is valuation risk. Despite the phenomenal numbers, the India Defense Index actually saw a 9% sell-off after the 2026 budget, which suggests the market might be resetting some overly rich valuations. And finally, budgetary concentration. Yes, global exports are rising, but these companies still rely heavily on one primary customer, the government of India. Any delay in allocations can take a direct bite out of their quarterly earnings.
Looking ahead, the government has set a truly staggering 50,000 crore export target by 2029. And honestly, given that massive 63% single-year jump we talked about at the start, it's a completely plausible goal. But as we've seen, the path isn't without friction. As domestic manufacturing tries to scale at absolutely unprecedented speeds to meet this exploding international demand, this is the ultimate question you should take away from this explainer today. Will supply chain bottlenecks and execution delays eventually ground India's massive export ambitions before they peak? Or are we witnessing the undeniable birth of a new global defense superpower? Thank you so much for joining us for this explainer. Definitely keep an eye on these order books. The next few years are going to be absolutely critical.